Hello students, I am Sadhguru Roshan. I hope you are doing well. Let us today discuss the topic accounting for not-for-profit organization. Learning objectives. Number 1. Identify the need for and nature of accounting records relating to not-for-profit organization. The first of all, we need to understand what is the purpose of not for organization firms to their customers. As we know that this kind of firms works for welfare of any society. Society is about needing people and poor people. Next objective is list the principal financial statements prepared by not-for-profit organizations. Financial statements show the financial position of any company. This can be bad or good. Apart from this, I must say that the financial statements also helps companies to take further decisions for investment purposes also. Prepare the receipt and payment account, income and expenditure account and balance sheet. Receipt and payment account shows all receipts and payments related to companies' working operations. Receipts like interest received, commission received, and dividend received. And same for the payment, commission paid and interest paid. Next, income and expenditure account. Company shows all the incomes to them, like commission received from agent, interest received on loan, etc. Next, expenditure account. Expenditure like commission paid, rent paid, and dividend paid. Last is balance sheet. Balance sheet shows the financial position of any company. It has two parts. First is liabilities and second is assets. First comes to the liabilities. Liabilities are those whose payment company has to make payment to the outsiders. It is of two types. First, current liabilities and non-current liabilities. Current liabilities are those whose company has to make payment within one accounting year. It includes creditors, bills payable, and bank overdraft. Non-current liabilities include share capital and debentures. Assets are those which can be converted in the form of cash by selling into the market. It is also of two types, current assets and non-current assets. Current assets are those which can be converted in the form of cash by selling into market, like cash, cash in hand, cash at bank, bank, and investments. Non-current assets are those which can be used by the company for long-term purposes like land, building, and furniture. Next, explain treatment of certain particular items of receipts and payments such as subscriptions from members, special funds, legacies and sale of old fixed assets, etc. Concept. It refers to organizations that are used for the welfare of a society. Society includes labor class and poor people. Those are struggle financially for surviving their life. The main aim is to provide service to a specific group. As I have said earlier, specific group includes labor class and poor people that do not manufacture, purchase or sell goods may not have any credit transactions. They all self-produce products and services for the needing people. Such organizations include clubs, charitable institutions, schools, religious organizations, trade unions, welfare societies, and societies for the promotion of art and culture. Next characteristics. The main sources of income of such organizations are: first, donations from any society or any public. Second, legal in bracket general. Third, grants in aid and income from investments, etc. Next, it is managed by a managing oblique executive committee elected by its members. These are organized as a charitable trust, oblique societies, and support subscribers to such organizations are called members. Next, accounting records of not-for-profit organizations. Number 1. Receipt and payment account. It is prepared at the end of the accounting year. As we know that the company follows accounting year from 1st April to 31st March. It is recorded on the basis of cash received and cash payments written in the cash book. For example, subscription received shall be shown on the receipt side of the receipt and payment account as one item with its total amount. Similarly, total salary paid, total rent paid, total electricity charges paid during the accounting year appear on the payment side of the receipt and payment account. This is the format of receipts and payment account for the period ending on any years like 31st December 2012, 31st December 2013. It has two sides, debit side and credit side. Debit side shows all receipts entries like to balance brought down, cash balance and bank balance. Next, to subscription for previous year, for current year and for next year. Next entry is to entrance fees, to donations for building, to general donations, to life membership fees, to legacy, to grants from government, to contributions for annual dinner, to rent, to receive on annual sports, to sale of old sports material, to sale of old magazines, to sundry receipts, to bank balance carries down in bracket bank overdraft. Bank overdraft is the facility which is given by bank to current account holders only. Under this, current account holders have a right to withdraw money for n number of times within 1 month. Bank charges commission from them at their every transactions. Next, payments side. It includes by balance brought down in bracket bank overdraft, by annual sports expenses, by salaries and wages, by rent, rates and taxes, by insurance, by furniture, by sports equipments, by books and periodicals, by audit fees, by printing and stationery, by honorarium, by bank charges, by postage and telegrams, by water and electricity, by conveyance and travelling, by sundry expenses, by annual dinner expenses, by 19% investment, by balance brought down cash and bank balance. Second is income and expenditure account. It is the summary of income and expenditure for the accounting year. It is just like a profit and loss account prepared on accrual basis in case of the business organizations. The expenses and losses on the expenditure side and incomes and gains on the income side of the account. It shows net operating results in the form of surplus, excess of income over expenditure or deficiency in bracket excess of expenditure over income, which is transferred to the capital fund shown in the balance sheet. Same, this is the format of income and expenditure account for the year ended. This may be for 31st December 2019, 31st December 2020. Debit side shows all the expenditures like to consumable materials, to honorarium, to salary and wages, to receipts, to expenses paid on specific show, in bracket any cultural events, to entertainment expenses, to printing and stationery, to newspapers and periodicals, to postage, to upkeep of loans, to rent, municipal taxes, to insurance, to loss on sale of fixed assets, to depreciation on fixed assets, to audit fees, to miscellaneous expenses, to surplus. It is also called excess of income over expenditure. But incomes include by subscriptions, by grant received in bracket for journal purposes, by entrance fees to the extent not capitalized, by general donations, by interest on deposit, by dividends, by collection for specific show in bracket any cultural events, by profit on sale of fixed assets, by lockers rent, by cloakroom rent received, by hall rent received, by receipts from sale of newspaper and magazines, by miscellaneous incomes, by deficient excess of expenditure over balance sheet. It shows the financial position of any company. This may be good or bad. Balance sheet also helps company to make further investments. Apart from all of these, company can take decisions to decide how much amount to invest for what period of time. Next, it shows assets and liabilities as at the end of a year. The assets are shown on the right hand side and the liabilities on the left hand side. Liabilities include current and non-current liabilities. Current liabilities include creditors, bills payable, bank overdraft, and outstanding expenses. The concept of current liabilities says that the current liabilities are those whose payment company has to make within one accounting year. Next, assets include current and non-current assets. Current assets include cash, cash in hand, cash at bank, bank investment, prepaid expenses, and bills receivable. Current assets are those which can be converted in form of cash by selling in market within one accounting year. Balance sheet. It is prepared by every company at the end of the year because it shows the financial position of any company. And investors, before investing any amount, can take decisions either to invest or not. The liabilities includes capital at net profit less drawings, general reserves, loans, sundry creditors, bills payable, bank overdraft, outstanding expenses, and advance incomes. But assets includes goodwill, patent, trademark, land and building, plant and machinery, furniture and fittings, vehicles, loose tools, fixed deposits, investments, investment in government securities, investment in shares and debentures, Loan given, preliminary expenses, closing stock, prepaid expenses, accrued income, sundry debtors, bills receivable, cash at bank, cash in hand. Thanks.